Hello for video number 2 of 4. Yes, 4 videos, not longer time period, just breaking it up into like 25 videos at a time. So it'll be more manageable for somebody to scroll through. Okay, so Blackstone, I'm going to leave it because they got added to some index and they spiked, and now they're coming back into the range they were trading at. Buyers into 105 and 104. If they lose 105 or 104, it will come back to 101, 102. So right here, I would, if you forced me to trade it with 18 days to the earnings, which I wouldn't, I think it's range bound between these two. Well, thanks a lot, Nick. Yeah, exactly. There's no need to go long or short from the chart. There are no clues. Okay, so that's the range. Celsius, I have to tell you, this stuff is not impressive. I'm an energy drinker, I was. I've tried all of them. Celsius does nothing for me. And whereas other ones do, like Bang. Bang is the best for me. So I think it's more hype than anything. So don't trade the hype, trade the chart or the fundamentals. The fundamentals are, hey, okay, they're not terrible. But you should know what you're, quote, investing. Don't trade the hype. Let's see how expensive it is. It is 14 sales, 14 times sales. Never been more expensive on this chart. What does that mean? Well, it has been more expensive in prior years. You're giving it, let's put it this way. Amazon is 2.5 times sales when you buy a stock of Amazon. How much do they grow? Let's see. That'll be a fair comparison to see if we can find a statement. Cash is okay. They grow in sales, so Amazon is not good compared. They don't grow that fast. You got to find a stock that grows that fast and compare it to that. Oh, I know, Twilio. Let's go look at something like Twilio. Twilio grows, but not that fast. So it doesn't have a real compare, okay? But be aware that it's not cheap. I would be interested in it maybe below 157. Maybe. Like, what is this insane candle right here? That seems like a lot of hype. This looks like a head and shoulders. I bet you there's a threat. There's a path for it to go like this, poke, recover, exit. Because I think they will do this. And I think my entry point would be inside here. From a chart perspective. From a company perspective, if you're investing for the super long term, take a bite, leave a lot of room to add. Charge point, it is unfortunate that they lost that little wiggle right there. They're trying to hold on to it. Sellers in charge. Every rally's being sold. Is this a bottom? We don't know. It looked like it up here. It looked like it down here, but it wasn't. They're selling rallies. Respect that. Let's zoom out one more time. Woo-wee. So, wow, okay, it's a bottomless pit. I wouldn't touch it. Unless you want to invest in it for the super long term and you believe in the company, that's respectable. That's based on fundamental. It's not all about charts. You can actually nibble and leave room to add. Don't go all in. Just leave room to double down at $2 if you still believe in it then. I don't want you to take your full lot now and double down when it goes to make your problem bigger. That's pretty stupid. CRM, don't touch it. Ding, 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 ding. You see how there is one thing pointing up and one thing pointing down? They're confused. That's because it's at an inflection point. If it loses this support zone, which is at 200, give or take, it probably will end up at 185, 180. Yeah, not for me. Wake me up when you get here and wake me up even more when you get down to 175. I will sell aggressively puts in it to be bullish. So there is a risk. Risk zone. So a better entry point down here. The powder works the best, Joe. Okay. Too much. Yeah. I've tried pre-workout stuff. It makes me more tingly, makes me sweat more, but it doesn't give me more energy. Maybe it does. I get aggravated, agitated. Bang, half a can of Bang, I'm up and running. All right, so who is this? CROX. I'm long CROX, and oh boy, that I sold an $85 put spread in CROX for last week. I punted half and kept half. The half that I kept died for maximum gains in my favor because it closed above 85, but it was close. When I punted it, it was 1 day left, 2 days left, and maybe a day and a half left, and it was at the money. I got a rally. I punted it the next week, and they gave me a big credit, so I took fewer contracts. And then when the spike happened, I closed it for better than even. So I acted prudently, and then I acted more prudently by closing the one that was in trouble that didn't expire. So I'm out of CROX, but I still think it will get to 95 or 97. I would not get out of calls. I got out of sold put spreads because they profit differently. I think the P&L is looking good. See, 85.80. That was close, but we got out of it. So, by the way, I would repeat that trade, but there are only 18 days left until earnings. I wouldn't touch it. I could ride calls or shares partially, but I would close into the earnings. CSCO, not a fan of this chart. I don't know a lot about the company details, but it's a dinosaur. It's a survivor. If you thought it had an ascending channel, it's still inside of it. This was stupid. They priced stupid out. And now let's see if they go to 51. If they get to 51 area, that flash crash, let me know. If they get anywhere below that, let me know again. Dawn. Don't know what that is. Biopharma. Okay, the chart says you can be long here. It's biopharma. Anything else is up to you. Any day, these guys have headlines like earnings. So chart says it's not a bad starting point between here and 12. Triple D. I think my SYS, my Stratasys trade is back. Somebody said they made money on it. Mine is about evenish red or something like that. Not a good starting point at 5. I think it dribbles down to 4.6, but not shortable. If they ever get above 5.4, they could skip to 6 right away, even though 5.6 looks a lot of resistance. So, yeah, that's going to be a problem, but I think low volume area makes it vacuumy. So I think if they can get out of 5.3, they go. So buy the dip. If you're a bull, that's what you want to happen. If it falls here this week and it dips somewhere between here and 4.6, get back long into it because they could do that. DDOG, not an obvious entry point, and I believe I was long on the dip. I do have it on my books. I got to go check it out. It's profitable. If not, and it's a credit put spread, I would leave it as long as it's statistically viable. 44 days until the next earnings. This is a nope, not an obvious point of entry up here. I think there are sellers in this area. And support. So buy the dip into the support if you're trading. If you're investing, there's nothing to do. Devin, is this Rich? Who asked for that? I have to go check. Ooh, I didn't check the questions. I'll check the questions at the end. 49 and a half is a pivotal zone. So the question is, can they get to 51 before they lose 46? If they lose 46, you get an entry at 45, 44. If they lose 44, goodness gracious. So energy stocks are super strong. Energy is breaking out. Why is this one struggling? Maybe it's because it's falling out of control, the revenues. So study the company if you're investing. On the yearly, it looks good, but if you go on the quarterly, that's 5 quarters of declines. So it's not cyclical thing, not seasonal. If it is, then 5 quarter, it would repeat every 4 quarters, right? So something is going on. Not an obvious entry point, and it has a must-hold zone. Be careful. eBay. I don't know how they still make money. I haven't bought anything on eBay. Well, I bought one thing, maybe 2 things in the last 6 months. eBay is cheaper than Amazon if you can find something. Amazon is easier to do business with than eBay. Faster deliveries, faster returns, uniform front door, even though it's the same crap on both companies. So eBay below 42 could get to 40.5. It's stuck between 45.5 and 42, 42.5. It's stuck in my white box. Nothing to do. I don't know what that is. Oil company? What happened? Find out what happened. Technically support around 11, better support around 1040. A lot of sellers at 1220 and above. End phase. The trade that doesn't want to die. I shared catching falling knife, and it's green. It has been green. It has been red for those who did the credit put spread for the last 3 weeks, almost every day, flip-flop, flip-flop. Mine were green because I sold straight-up puts, and I've scalped most of them. I still have 1 or 2, and they expire in 23 days. No, they expire. I will close them, all of them, in the next week or so. I do not want to go into earnings with sold puts in this guy. No way, no how. Although, technically, this thing looks like it could rip, but I don't trust it. The company's good, but it drops on anything. Solar, bad news. Industrials, bad news. Anything. So, no thanks. This is a shortable stock up here. Fadeable. This is not an obvious entry point unless you're looking to fade it. So right here, I said there's a decision to be made. Either they drift lower with the white or they go higher with the green after a dip. And they basically took advantage of all the momentum they had into prior fails. For me, I wouldn't touch it up here. I don't have good clues. This played out. So I said from here, it's going to fall, hit support inside this gigantic candle. Look at that gigantic candle. I said decision inside the circle. Inside the circle, they bounced. So the decision would be either to finish the white or bounce and get to a target. You could not draw a more perfect chart than this. And I know somebody would say, oh, you said it was going to go up or it was going to go down. I said, no, it's going to probably dip, test support, make a decision, and finish target A or target B. It went to target A. As long as they're below this, this is no way an entry point for me unless I'm investing in it based on something not from the chart. FUTU. Why? Why deal with the escargot? Good P&L though, so I forget what they do. Wow, that's pretty impressive. So this is a fintech, maybe payment processing in some country out there. 66 or 67 could get you to 80. Performing well when the others are not. Square cannot find a bottom, and this guy is taken off. So don't short it. But it's not for me. I don't know the company. Let's get you to know it. Look at these numbers. Just too perfect. You don't ever see this stuff. Gross profit here, operating, like they don't spend any money. They collect all the money. I mean, where is this wizardry coming from? It just sounds too perfect. You don't see anything. This is like, okay, and they lived happily ever after kind of a story. What? I've never seen a P&L like this. Wow. That is freaking bizarre. Very strange. It's all financial services. And the high debt disappeared. All free cash flow. Wow. Impressive. Yeah. Well, invest in it for the long term and don't look back. General Dynamics. Nothing to do. You have sellers above, buyer below. I have no decisions. Super hard sellers into 225. Super strong buyers below 218 to 219. Nothing to do from the chart. So study the homework. Do the homework on the company itself. Alphabet. If you go above 134, you can get to 138. Otherwise, they're supported into 128. And it's well consolidated. I have two alerts for myself. One around 127-ish, one around 123. I personally will go down. If it hits here, if the markets hiccup this next week, if Powell says something stupid to scare people who are not educated, I would do that. So the risk is, how do we get there? If we lose this consolidation zone, this will give me 122, 121. Losing this gives me us 122 minus. That's my speculation. It's not my forecast. It's actually lower, but I would get engaged down here. Okay, versus taking out 134 is the opposite effect. So which one do we believe? I believe it can drift up to 134, 35 and fade. But earnings are coming and it's a beast. So don't short it. So it's ping pong between 134 and 129. 134, 129. Groupon, why? They got a buyout, right? They have a buyout offer. Was it? Apron, A-P-R-N. Apron. Okay, never mind. That's pretty good performance from Groupon. Pretty impressive. I don't know anything about the company. The P&L is not that impressive, so somebody knows something, or it's technically broken out. This is not an obvious entry point. It could get to 18. I don't want to stop you from that. But for investors, it's not an obvious entry point. Good job if you're long. Sell covered calls or trim. Goldman Sachs, I definitely don't want anything to do with banks, and this is on the top of my list. It fell into super strong support. It has been support. The bears have not been able to crush it. If they do, it gets to 295, 296. So this hump is still going. Whoops. Yeah, it went higher, but it's the same neckline. Lose this neckline, you come into secondary support zone. Seller, buyer, stuck in the middle. It could be 108, could be 124. What's your time frame? Super hard seller at 120 to 122. Easier to get to 112 than get to 122, I think. Seems like it. I don't know much about it. Earnings in 3 days. Forget everything I said. Flip a coin like 3 or 4 times. Take the average and go with that. Flip it an odd number of times so you would have a winner. This one, short term, stuck between 45 and 48. Slightly longer term, I would buy dips into 42. Definitely not an entry point. If they get above 50, they have more room to run. So are you trading or investing? Make sure to know. The target of taking that out, 44, is somewhere like 52. So they could drift higher. I would buy dips into 42. Just like Cisco, whatever chart earlier we said, I would buy, Adobe. I would buy dips into this zone. Dips into 43 would be buyable to see if you can ride it back up. This is a spin-off off of somebody else. When spin-offs happen, I don't touch them. I need about a year's worth of data because you have no idea what's inside this company now and definitely no idea from the chart. I would not invest in it. If I have some, I would either get out after some pain or just if I invested one part of many, I would just let it see where it goes and add the second part. Eventually, it will land on the fair price at a fair price, fair entry price. Okay, and now we head to video number 3. I'll stop this one.